Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of February 11th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage here to give you your update. Well, last week we saw mortgage bonds tried to rally in the middle of the week, which meant home loans rates actually did move slightly lower in the middle of the week, but at the end of the week, the rally faded and actually sold off, and mortgage rates ended the week lower or higher than they started. Now, what caused this rally? If you look at the chart, you can see that the downward trend we've been on for mortgage bonds has continued, but for the last week and a half, we've been trading in this tight range. And you can see that on Friday, that red candle, we sold off on good news out of China, which helped spark the stock market to rally. Pulled money out of bonds, home loan rates moved lower. Now, the trend is still lower, as you can see from the arrow, but we're still trading in a tight range. So I'm going to recommend floating your mortgage rate until Monday to see if we can get a rally again to try and move above that 200-day moving average you see right there on the chart. If we can break above that, then we could see home loan rates convincingly move lower again. But for now, we'll float. If we do not rally on Monday, I am going to switch to a locking stance because the rates could move much higher if it falls below the level of support. In other news, last week we saw some good news on housing. They finally released the final numbers for 2012, and a national average for home prices appreciation for 2012 is 8.3%. That means if you bought a home at the beginning of 2012, it was worth 8.3% more at the end of 2012. That's the first yearly increase since 2006, and the projections for 2013 are an increase again between 7 and 10%, depending on which study you look at. But that wasn't all good news last week. The Congressional Budget Office did release some projections for 2013 on the economy, and it was not good news. The CBO is projecting the gross domestic product GDP to only grow at 1.4%. That is too low to move unemployment any lower, so they're projecting unemployment to stay at 7.9%. They're also looking at the reason why we're not going to grow is because there's some automatic spending cuts to go into effect March 1st from the fiscal cliff deal. And we've also going to see higher tax rates, which you're already seeing in your paychecks, which was, again, part of the fiscal cliff deal. So spending cuts and higher tax rates are going to be a damper on the economy, which is going to keep the GDP low, which will keep unemployment rates high. We also saw some news coming out of Europe. Greece is not going to be able to meet the terms of its third bailout as they're in a severe depression, so that's going to weigh on the European economy, which could spill over to us, which could actually help our bonds. So that may be an impetus to help us move above that 200-day moving average. We also saw Spain in big trouble. Double-digit unemployment still persists, and it has the second largest debt load in the European Union. And we're also going to be looking for more countries that are struggling to maybe start poking their heads up as big problems to watch. Italy goes to the polls later this month. The former Prime Minister is running from behind in the polls, but gaining on a platform that is anti-austerity. That means the anti-putting in sanctions to help them get out of their trouble that they're in, because the country is in trouble, just like Spain. So if he wins and they reject austerity, that could be bad news for Europe, and that would be bad news for the stock market. So that may actually help bonds move higher and home loan rates move lower. In the local news, we've got the Delaware State Housing Programs Rebuilding Our Communities program, commonly called the ROC. That ended last week officially. They allocate 100% of the funds. It's not being refunded, so effective immediately. There is no more ROC program. There are, however, other options to help you with down payment if you are looking for those. In the blog, there's a link to Delaware Down Payment Assistance Programs. We also saw the USDA program is coming up on the change date, March 27th, 2013. USDA switches over to using the 2010 census, and that's going to decrease the eligible areas that are eligible for USDA financing. Specifically in Delaware, that's going to mean Middletown and Smyrna go out. Now, we don't know exactly where the line's going to be, but they did say after February 28th they will have the maps updated with the new areas, so we can check those then, so we will update you on that. In the local news, we got the next free first-time homebuyer seminar in Newark. That is at the Christiana Hilton Hotel, and that is February 16th. That's a Saturday. 2 sessions to choose from, 10 a.m. to noon or 1 p.m. to 3 p.m. And then in Dover, Tuesday, February 19th from 6:30 to 8:30 in Dover at the Dover Sheraton. You can register for either one of those seminars by giving us a call in the office, 302-703-0727, or you can register online, www.delawarehomebuyerseminar.com. Now, if you want to take advantage of these record low rates, get a house now while that market is appreciating, give us a call in the office. We'll give you a free mortgage consultation, either get you pre-approved or get you in our Get Mortgage Ready program. So give us a call, 302-703-0727, or apply online, www.prmidelaware.com. Look forward to seeing you next week.